Our case study is about company named Wirecard. So here is a little bit overview about this company. Wirecard was founded in 1999 at Germany and initially ran the internet payment services for porn and gambling website. However, during 2002, when the company is almost at jaw of debt, Marcus Brown injected some capital to the company and became a CEO for that company. I barely can say that the starting point for development of Wirecard. As he appointed as CEO, there are many changes happen in that company. Wirecard more specific is service, which is providing internet payment services in financial technology sector. And their main core is mobile payment, e-commerce digitalization and financial technology. There are many variations of ideas have been made in order to enhance the quality of financial transaction until enable them to become leading in this sector. Wirecard become well known worldwide. However, no matter how sneaky you are, you will be caught someday. Finally, during 2015, publication of statement from the Financial Times House contributed to the start of Wirecard downfall. People start to know that every accomplishment is embroidered with fraud, manipulation of data, round-tripping among allies and so on. So in this video, we would like to focus on how an auditor face and react on all those circumstances.
Here to talk about the chronology of Wirecard scandal from 2007 to 2014. In 2007, investors' worries were allayed by a faultless audit from Ernst & Young (EY). Since 2006, Wirecard has been a part of both the tax DAX and DAX. By acquiring Excom Bank AG, Wirecard entered the banking industry and was able to issue credit and debit cards, thanks to license with both Visa and MasterCard, where it could manage and issue money for businesses. It was more difficult to read its accounting and audit it at this stage because it was running a rather sophisticated hybrid of services. The company's financial statements were likewise highly intricate and frequently reliant on its investors facing interpretation of events. In 2008, in a published article, the head of a German shareholder association criticizes Wirecard and claimed irregularities in the company's balance sheet. The small Munich company that had previously carried out specific audits was replaced the next year by Ernst & Young (EY) as the group auditor. The German police eventually brought two men who had concealed their ownership of Wirecard stock to court in relation to the assault. In 2010, the chief operating officer is Marcus Brown's youthful protege and fellow Austrian Jan Marsalek. They informed the workforce that Wirecard has plans to expand internationally and will function in English. Based on the audit report in 2010, the auditor gave true and fair view of net assets, financial position, and also the results of operation. EY audits Wirecard's annual results for the first time, and initially with the payments firm's previous auditor, RP Richter, which was a small firm. In 2011 to 2014, Wirecard raises €500 million from stockholders and spends it all. In a series of strangely constructed transactions, it acquires obscure payments companies all over Asia, beginning in Singapore, which became its regional headquarters. The rapid expansion of Wirecard and its assertions of superior payment technology attracts investors. In 2011, EY became sole auditor of Wirecard. Thank you.
Hello, my name is Muhammad Akif bin Muhammadin, and now I will continue with the chronology part. In 2015, Wirecard recruited London FTI Consulting to handle its external public relations after Financial Times raised concern about inconsistency in their financial statement. Then, in 2017, because of EY auditor provided a clear and fair audit, investors resumed investing in Wirecard share. Because of this clean audit, it enabled Wirecard to purchase Citi's payment processing business, which is active in 11 ASEAN nations. At the end of 2018, EY auditor made the decision to carefully examine Wirecard, which is one to look closely at the payment procedure carried out by the outsourcing partner in Asia. In October 2019, after the Financial Times published an article stating that profit in several Wirecard operations outside of Germany had been overstated, Wirecard has appointed KPMG, another audit firm, to conduct a special audit. In November 2019, EY was unable to express a view on the standalone statement due to an ongoing investigation that restricts the access for the company's record. In April 2020, according to an independent inquiry by KPMG auditor, Wirecard did not present enough supporting evidence to refute all the Financial Times claim of accounting problems. KPMG also indicated that they were unable to confirm profit from 2016 to 2018. In June 2020, EY auditor made the revelation that 1.9 billion euros loss of funds from the Wirecard company's account, and then Wirecard filed for insolvency at 25 June 2020.
Hi, my name is Muhammad Adi Imran. Now I will continue for codes of ethics of auditor. There are 5 codes of ethics that auditor must follow. First, integrity. An auditor must have a very high level of integrity. A professional accountant shall comply with the principle of integrity, which requires an accountant to be straightforward and honest in all professional and business relationships. The report, correspondence, and other company-related material must be completely understood by EY as Wirecard's auditor. When auditing financial statement, EY is accountable for acting fairly and honestly. Second, objectivity. An auditor must have objectivity and be professional in auditing a company. Professional accountant must adhere to the principle of objectivity, which require accountant to exercise professional or business judgment without compromise by bias, conflict of interest, or undue influence or undue reliance on individual, organization, technology, or other factors. In order for financial reporting to function well, EY should uphold the objectivity concept while getting reasonable certainty on the financial statement. Okay, for the third code of ethics, professional competence and due care. A professional accountant should comply with the principle of professional competence and due care, which requires an accountant to maintain professional knowledge and skill and act diligently and in accordance with applicable technical and professional standards. The auditor responsibility should not be too much for them to handle. EY must be aware and abide by all applicable standards, regulations, rules, and practice for auditing accountants and financial management. Fourth, confidentially. A professional accountant should comply with the principle of confidentiality, which require an accountant to respect the confidentiality of information acquired as a result of professional and business relationship, unless there is more or legal requirement to divulge it. EY must maintain the confidentiality of any information acquired via commercial and professional contact. For the last code of ethics, which is professional behavior, a professional accountant should comply with the principle of professional behavior, which requires an accountant to comply with relevant law and regulation and avoid any conduct that the accountant knows or should know might discredit the profession. EY is committed to provide top-notch service while adhering to ethical standards and EY process and procedures. EY only accept engagement that they can successfully fulfill in accordance with their strict criteria. EY also use a harsh approach to situation while adhering to professional ethics in order to get the greatest result. In addition, EY is under constant pressure to update and advance the ability required to fulfill his role as a professional auditor.
Based on our case study, an auditor in a Wirecard company did everything they could. They attempted to uncover all of the fraud until they found solid evidence that could be judged by the authority. This case, however, is still going. Throughout the process, they are unable to obtain full access to the necessary documents and sources. It has become the primary reason for their inability to provide true and fair evaluation. The most intriguing aspect in all of this happening in a circle and all over the world. Round tripping is an example. The money will be circulated through their entity and end up with their own allies. This is also one of the reasons it is difficult to identify their fraud. According to this case study, when a company runs a business illegally, a lot of things can happen to an auditor, such as the company blaming the auditor and filing a citation for a ridiculous amount. In order to avoid this from happening, the auditor should sign an agreement to limit their charge on liability.